Hello and welcome to this continuing session of the landed cost modules. In this presentation, we review the required setup and the prerequisite configurations of the landed cost modules. I have summarized the required setup into the following four building blocks: the costing management, shipping information, journey and activities, and the warehouse management setup and configurations. Now let's get started with the costing management setup. And the costing management area is one of the essential elements of the landed cost calculation process. So at this part, we review how to define multiple cost type codes like insurance, freight, customs, and so on. Then we review how you can manage the auto cost. The auto cost, as clarified in the previous video, it works like the trade agreements. So you can define automatic cost calculation using different scenarios and for multiple combinations. And then we review the cost template. And the cost template is a very powerful option for the customers who are dealing with standard cost items. Because the process of calculating the prices of the standard cost items, it's not that easy because it depends on multiple factors and different inputs, and it has so many calculation elements. However, using the cost template feature, you can manage it effectively. So you can determine an estimate item cost to price using different calculation factors and based on different inputs. So eventually you will have a pending cost to price or an estimated item cost to price. And then following the normal process of activating standard cost to price, you can activate that cost to price, and then you can use it in the normal business process. Now moving to the logistical area. And at this part, we review how you can define shipping containers and the shipping containers types that the organization is dealing with. And then we review the track and control center. Track and control center manage the information flow, voyage status, and you can define the estimated dates of every activity within the journey. Then we review the delivery and shipping information like commodity codes, exporters, ports, vessels, and so on. Then we'll walk through the journey templates. And as clarified, the journey templates are multi-leg journey between two locations or two ports where the goods are being moved. So the journey template contains one or more legs, and the legs identify as separate parts of the journey. The leg could be a location or a port, like the location where the goods are moving from to the location where the goods will shipping to. Then also we review how you can define the activities, and the activities can be used to store and track each significant step of the journey between two ports. The journey templates work along with the track and control center, so you can link each leg to a specific or an appropriate status, and you can also define the estimated dates of every leg. After that, we review the warehouse management setup, and at this part, we'll review how you can define goods in transit warehouse and under delivery warehouse. And then we review how you can specify the over and under delivery tolerance. And then we'll review the normal configurations of the warehouse management process, like work template, location directives, and the required menu items. Now it's the application time, so let's move to Dynamics 365 for supply chain management to review the required configurations. The landed cost module is managed by a feature management. So in order to get started and work with the landed cost module, you should ensure first that the landed cost feature has been activated. And in order to activate the landed cost feature, please navigate to the feature management workspace and then find the landed cost feature and then click activate. After that, you should be able to navigate to the landed cost module. And here underneath this setup area, you will find a couple of setup and configurations sections like containers setup, costing setup, delivery information and shipping information setup, multi-leg journeys, and over and under delivery setup. We will walk through all of these required setup. However, I'll focus first on the costing setup, and I'll start by defining the cost type codes. The cost type codes is determine the type of the cost that is incurred in the landed cost process. So here, for example, I have a cost codes for air freight, customs, duty, freight, fuel, insurance, and so on. In order to create new cost type code, click New, type the cost type code and description. And if you are dealing or calculating cost type codes in a foreign currency, so for sure you will require an exchange rate. This exchange rate could be the exchange rate defined in the default exchange rate type in the ledger setup, or also you can define a specific exchange rate type for the landed cost process. If you wanted to specify a exchange rate type for the landed cost process, navigate to the landed cost parameter in the landed cost module, and then in the general section, you can select a specific exchange rate type for the landed cost. So moving back to the cost code. In order to ensure that this cost type code will pick and retrieve the exchange rate specified in the shipping exchange rate, so please set this checkbox to yes. And then the reporting category. In the reporting category, you will find 6 predefined values. These values are logically grouping of the cost codes. This will be useful when you run a report. For example, you can run a report and view the landed cost, for example, of the freight, or you can run the report that categorize the landed cost of duty and so on. And moving to the important part with the cost type codes, which is the posting section. With every and each cost type code, you should define the debit and credit side. Normally, with the landed cost process, you should increase the item cost. So in order to increase the item cost by the cost code, please set the type of the debit side equal to item. So this ensures that the posting the cost code on the voyage, for example, it will increase the item cost, and the credit side will be a vendor. So this vendor will be the vendor of the landed cost. But the point is, until you post the purchase order invoice and receive the actual landed cost invoice, you should hit or use a clearing account. So this clearing account will be used when you post a purchase order invoice. So first, when you post the purchase order invoice, it will debit the inventory and it will credit this clearing account. And then when you post the actual landed cost invoice, it will debit this clearing account and it will credit the landed cost vendor. And here we have some variances accounts for the standard cost and the moving average item. So if you are using standard cost or moving average item model group, you should define these accounts. And if you are enable post charge in the accounts payable module, so also you should define the variance account and the charge accrual account and the charge account. So after defining the cost type codes, now let's move to another important part, which is the auto cost. So in order to navigate to the auto cost, you should find that underneath the costing setup and then auto cost. The auto cost works like the trade agreement, so you can define the automatic cost calculation for different areas like voyage, shipping container, folio, purchase order, item, transfer order line, and this also possible based on multiple combinations. So you can specify if this applicable for a specific shipping company, mode of delivery, from port to port, and so on. And here under the line section, you should find the applicable cost codes for this cost template. So this is, for example, this is from port Shanghai, China to a port of Alexandria. So so when I create a purchase order from these ports, these cost codes will be applicable. So this is on the voyage level. I have also created another automatic cost calculation on the item level. So this has account code all, and I have here item code. So this cost code, which is the duty, will be applicable for a specific item group, which is the item groups that link it to item relation of 10%. And now the question, how to create the item groups and how to link this item groups to the item and vendor. So let's navigate to the landed cost module again. So here in the landed cost module, underneath the costing setup, you should find cost type codes, vendor cost type groups, and item cost type group. So this is in normal groups you can with a code and description. So this is for the vendor. So I have a group for Chinese vendor, European vendors, and so on. And then under the item cost type groups, I have a groups that represent the duty percentage. After creating the group, you can navigate to your item. This is in the released product form, and you can link in the purchase fast tab, and then voyage group, you can link this group. So this is for the item, and for the vendor, this is the all vendors form. Underneath the miscellaneous details fast tab, you can also link this cost type group and another important setup, which is the shipping shipping type. So here in the shipping type, this is a new option that define the type of the vendor. So this is could be a shipping company. This is could be a customs broker. This could be an agent. So if this is a shipping company, for example, and when you're back to the auto cost, you can select this as a shipping company. Okay, and now moving back to the automatic cost or the auto cost. Here in the auto cost under the voyage, back to our auto cost, I have here a couple of cost codes like freight, insurance, local transportation. So we will walk through a summarized scenario to validate how these calculation will be possible. But first, I'd like to clarify something. This is a cost calculation on the voyage level, and this voyage might have a different lines. So how to apportionment or how to allocate the cost from the voyage level to the lines level. This could be possible with the apportionment method. So here, if I click add, you can select the cost type code, and then you should select the apportionment method. So here we have a couple of apportionment methods like the percent, quantity, amount, volume, weight, measurement, and volumetric. These methods seems to be a direct. However, these two methods, the measurement and volumetric, required further clarification, and I'm gonna clarify this into uh, this next slides. The first apportionment method is the volumetric weight, or also known as the dimensional weight or the DIM. The volumetric weight is a pricing technique that used by the shipping companies, which is use the dimensional weight to calculate the shipping cost. This method used when the space of a shipment takes on an aircraft, for example, may cost more than the actual weight of the shipment. So this method works in a way to calculate first the actual weight of the shipment and then to calculate the volumetric weight of that shipment. And then the shipping fee is based upon the dimensional weight or the actual weight, whichever is greater. And now the question is how to calculate the volumetric weight. The volumetric weight can be calculated by multiplying the length, width, height of the shipment or the item volume in centimeter, and then dividing that figure by a specific factor or divisor. This divisor might vary between the shipping companies. However, most of the shipping companies are using 5 thousandths where the weight in kilograms and 138.4 where the weight in pounds. So for example, you could have a box of payload that is quite large. Let's say the dimensions are 100 centimeters, 50 centimeters, and 50 centimeters. But when you look at this below weighting 5 kilograms, this is the actual weight of the below. However, when you calculate the volumetric weight of this below, it will equal to 50 kilograms. So in that case, since the volumetric weight is greater than the actual weight, so the shipping cost will be calculated using the volumetric weight, which is 50 kilogram. And it works the other way also like this below. you can also have in your shipment a metal box. So this metal box dimensions of this metal box is 30 centimeter, 30 centimeter, 20 centimeter, weighing 10 kilograms in physical weight. And using the same equation, you will find that the volumetric weight of this shipment is 5.4 kilograms. And so this is the volumetric weight, and the actual weight is 10 kilograms. So in this instance, since the volumetric weight is lower than the physical weight, so the actual weight will be used to calculate the shipping cost, meaning that the price would be calculated on 10 kilograms. The second apportionment method is the measurement. As we have discussed, there are a couple of apportionment methods like the amount, percent, quantity, item volume, or item weight, and so on. But what about the organizations that don't know the volume or the weight of the goods? And they still require a more accurate method than the amount or the quantity. In that case, they can use the measurement. And the measurement is not a set measurement or a specific measurement. So it could be any measurement that is used by the organization, like the weight, volume, size, number of pallets, and so on. So for example, you could have apportionment of the freight cost based on the number of skids processed. So in this scenario, I have three skids that have been processed in this voyage, and I have two items, item A and item B. The item A used only one skid, and the item B used two skids. And the freight cost is 20 Egyptian pound per skid. So the total freight cost will be 60 Egyptian pound. And when it comes to allocate the freight cost to item A and item B, the item A cost will be 60, which is the total freight cost, multiplied by 1/3, which is the measurement of item A. So it will equal 20 Egyptian pound. And for item B, it will be calculated by multiplied 60 Egyptian pound multiplied by 2/3, which is the measurement of item B. So the freight cost of item B will equal to 40 Egyptian pound. Okay, and now moving back to the auto cost. I've tried to combine between all the possible scenarios and the features available with the auto cost in a one scenario. So I have created here three applicable cost type codes. The first one is the freight, and the measurement method is measurement. And the category or the way that we're gonna calculate the cost value is based on rate. This could be a fixed value, pieces, percent, or also volumetric. So I selected here a rate, and I have marked this option, which is the broken by quantity. This means that the cost value will be calculated in a multiple tiers. So how to define the tiers? Just mark this checkbox and then open this quantity breaks. You should find here the quantity and the cost of value. So this means that one piece will cost 20 Egyptian pound, 10 pieces and above will cost 10 Egyptian pound, 20 pieces will cost only 5 Egyptian pounds. So this is the first line. The cost value here is 0 because again this will be calculated based on a quantity breaks, and here is the currency. And the second cost code is the insurance, and the insurance will be calculated as a percentage. This is a 10%, and it will be apportionment based on amount calculation. So this is the cost of value. But I have also another option here, which is the minimum cost. So this means that if the 10% of the voyage will be lower than the minimum cost defined here, which is the 500, so the 500 will take place. And the third third line here is for the local transportation. The local transportations will be calculated as a category of percent of 25%, but this will be calculated 25% linked to a cost type. So this means that this will be 25% of the freight cost, which is defined here. And the apportionment method will be quantity. So, and the last one, this is the duty, and the duty will be calculated based on 10%, 10 percentage for the items that have been associated or linked to this group. Now let's navigate to the purchase order. I have created this simple purchase order with two lines. So this is for the first item, landed cost A. The quantity is 1, unit price is 100, so the total amount is 100. And the second item is landed cost B, quantity 2, unit price 200, so the net amount is 400. Just to make the session quite short, let's navigate directly to the voyage and see how this has been calculated. Cost inquiry. Let's sort this. So here, let's review first the freight cost. So the freight cost here is based on a measurement. So let's see how I define the measurement. So this is the measurement place. So assuming that the freight forwarder back and said that the number of the skids or the measurement that I used is 3 measurements. So I have specified here the 3 measurement. And then on the voyage line, I have specified here 1 measurement for the first line and 2 of the second line. So when I navigate to the cost inquiry and see how this has been calculated. So first, the freight has been calculated first using the quantity breaks. So this is 3 measurement. So 3 measurement means that it will cost 20 Egyptian pound. So the total cost will be 60 Egyptian pound. And then this will be allocated with 1/3 for the first item and 2/3 for the second item. Okay. And the second line, which is the insurance is 10%, and it has a minimum amount of 500. So if we review here the insurance, you will find that the insurance is 500, which is the minimum amount, and then it has been apportionment based on the amount. The amount was 100 for the first line, 400 for the second line. So that's why it has been the estimated cost equal 100 and 400 for the first and second line. And the third one, which is the local transportation equal to 25% of the freight cost. The freight cost was, the total freight cost was 60. So 60 multiplied by 25%, this will be 15. So if we review this, the local transportation equal to 15. And then this has been apportionment based on the quantity, which is 1/3 and 2/3. So the first item is 5 Egyptian pound and the second item is 10 Egyptian pound. And the duty is 10% of the line amount. So the first line will has a duty of 10 Egyptian pound and the second line will have 40 Egyptian pound. So I have also prepared a demonstration specific for the volumetric method. So here in the auto cost and under the cost area shipping container, I have a specified automatic cost calculation for a specific shipping company, which is the town air freight. So this automatic cost calculation is applicable for the shipping company and from port Melbourne, Australia to Auckland, New Zealand port. And the cost type code here is air, and the apportionment method and the category will be volumetric, and the cost will be 50 Egyptian pound. As we have discussed that the volumetric weight works in a way to first calculate the volume, and then this volume will be divided by a shipping company divisor. So we have to define first the item volume, and then we have to define the shipping company divisors. So in order to define the shipping company or the volumetric divisor, please navigate to landed cost, costing setup, volumetric divisors, and then click new. Select the shipping company. So I have here the same shipping company, which is the Town Air Freight. You can also mention here the cost type code and a specific port. So the volumetric advisor here is 5,000. And I have prepared for this demo 2 items, landed cost C and landed cost D. And to define the item volume and weight here under the Manage Inventory Fast tab, you can define the net weight. So the net weight of the landed cost C is 3 kilograms. and the volume is 9,000. This volume in centimeters. And then for the landed cost D, I specified here the gross weight equal 1 kilogram, point 5, and I set the volume as the same just to make it apple to apple and to compare the results. And then let's calculate this first. So let's calculate first the volumetric weight of the landed cost C. So for the volumetric weight of the landed cost C will be the volume, which is 9,000, divided by the volumetric advisors, which is the 5,000. So this means that the volumetric weight is 1.8 kilogram. Indeed, this 1.8 kilogram is lower than the actual weight. So in this instance, the actual weight will be used to calculate the shipping cost or price. So if we navigate to the cost inquiry, I forgot to mention I have created two purchase orders with two separate voyages for landed cost T and landed cost D to review the calculation results. And this is the voyage of the item landed cost C. So here how this has been calculated, the estimated cost price is 150, which is the actual weight or the 3 kilograms multiplied by the cost value in the automatic cost. And for the other item, the landed cost D, let's calculate the volumetric weight. The volumetric weight will be again the volume divided by the 5,000, which is indeed the same 1.8. And here, this 1.8 or the volumetric weight is greater than the actual weight. So in this case, the volumetric weight will be used to calculate the shipping cost. So if we navigate here, you will see that the estimated cost is 90, which is 0.8 multiplied by 50. And now let's move and review how the cost template works. The cost template, as clarified, it would help the customers who are dealing with standard cost items to calculate the standard cost of these items. This for sure will work along with automatic cost calculation. So we will define cost template and we'll define automatic cost calculation, and then we'll see how this will be calculated. Let's first start by creating the cost template. You should find the cost template in the landed cost module and then setup and then costing setup. You should find here the cost templates. So here I have three cost templates. The cost template might be applicable for a specific shipping company, mode of delivery, shipping container type, or a customs broker. The important part here is the factor. The factor for this standard cost template here is 1. This means that when the automatic cost calculation applied, so the item cost price will be 100 of the automatic cost calculation. You might be more optimistic and set the factor to 0.75%. So this means that the item cost price will be 0.75% of the automatic cost calculation. You could be also more conservative and set the factor to 2. This means that this will be doubled. And now let's move to the auto cost and see the auto cost that will be used. I have here the automatic cost calculation. This is applicable from port. This is from Ningbo, China to Melbourne, Australia. I have here cost type code freight. The category is fixed. So this means that the shipping container will cost 10 Egyptian pound and the apportion method will be quantity. And I have also set up automatic cost calculation for the voyage. So the voyage here is insurance and the category will be percent. So this will be 10% of the calculation. Now let's move and run the cost template calculation, navigate to landed cost, and then periodic tasks, and then cost estimates. And then first, let's select the cost template. I'll select here the cost template standard and the estimation date, which is today. And here in the measurement, since we don't have a apportioned method of a measurement, so I'll keep it blank, and then I'll select the journey template. So this is from Ningbo, China to Melbourne, Australia. So I'll select this cost template, the currency, and the shipping of containers. In this scenario, the shipping of containers is important because in the automatic cost calculation, we have fixed calculation, which is 10 Egyptian pound for the shipping container. So if I go back and mention here that this is 4 or 5 or 6 shipping containers, this will multiply it by the number of shipping containers. Let's say this is 3 containers and also 3 folio. And here, this is the site. I'll select my site. This is also the site where the pending cost of price will be calculated later. And then I'll select here the items, add lines, and then I'll select my item. I just created this item. And here I'll mention the vendor, quantity, and the cost of price. And then I'll click OK. If you have multiple items, indeed, you can list the all of items here. And then click OK. So here, this is the output of the cost template. So here, first, the estimated landed cost is 140. Let's see how this calculated. Let's click on the cost inquiry and see. So this saying that the freight cost will be 30 Egyptian pound, which is 3 shipping containers multiplied by the fixed cost defined here. And the other one is the insurance, which is 10 Egyptian pound, which is 10% of the item cost. Now I can apply some changes here. I can like updating the quantity. I can updating the cost price. So for example, let's update the cost price and say that this is the cost price of the item. I'm gonna make this 200 and then click save. After that, I can recalculate the item cost price once again. So I can just click recalculate and then view the cost inquiry. So the freight, which is fixed cost, it will remains as the same, but the insurance value has been recalculated here. When you be sure that this is the latest changes, or if you wanna to avoid further changes on the cost estimate, you can look this cost estimate. And if you wanna right now to update the cost price of that item, you can just click on the update standard cost and then select the default cost version and then click update. So this will be updated with a standard cost price of 250 and click OK. So now let's navigate to this item and see the pending cost price. So this will open up the release the product form and then manage cost and then set up item price. You should find here the new pending cost price, which is 250. And then you can also review the landed cost breakdown. So this is the breakdown of the landed cost. You can set here the date, save, and then you can activate this pending price. And now let's move from the costing management setup and move to another area, which is the logistical area. So here under the landed cost modules, you should find the containers setup. And underneath the containers setup, you should be able to manage and define the shipping containers types, shipping containers, unit types, and refrigeration types. Let's get started with the shipping container types. So the shipping container types, you can use the shipping container type form to define the available types of the shipping containers that are used by the business during the shipping and the voyage process. In order to create a new shipping container type, click New, enter the shipping container type identification and the description. You can also mention the shipping container type, volume, and weight, and you can determine if this shipping container type is returnable or not. The shipping container type is also useful if you have a auto cost calculation record that applicable for a specific shipping container type. And now moving to the shipping containers. And the shipping container step or form is useful if your company owns the shipping containers. So if this is the situation, so you can define the shipping container IDs available in your company, and then while creating the voyage, you can select the shipping container from a predefined list. But if your company does not own the shipping containers and just deal with a shipping company, so the shipping container will be used only probably for a once, then you don't need to create the shipping container here in this form, and you can just mention the shipping container ID while creating the voyage as a reference. The unit types. And the unit types are typically used to identify the type of the container that the goods are packed in, such as pallets, drums, and so. In order to create a new unit type, click New, type the unit type ID and description. The refrigeration types. And the refrigeration types used to group as a logically group, I identify the refrigerated containers. So you can define here the refrigeration type and description, and then you can attach this in the shipping container form. And now after configuring the shipping containers, let's move to another part in the logistical area, which is the shipping information setup. In the shipping information setup, we review the description of the goods, the vessels, exporters, commodity codes, and the customs description. You can use the description of the goods to describe the nature and the type of the goods that transport during the journey. The description of the goods could be linked to a voyage, shipping container, or a volume. In order to create here a new description of a goods, just click New and enter a unique identifier for the description of the goods and a valid description. Then let's move to another part in the shipping information setup, which is the vessels. And as clarified in the previous video that the vessels are the medium that is used to transport the goods. This could be, for example, a ship or an airplane. In this form, you can define a unique name for the vessels that are used by the shipping company or the agencies. This would be helpful as well while creating the voyage, so you can select the vessel from a predefined list there. Also, this could be possible to just enter or refer to the vessel ID while creating the voyage. The vessel could be linked to a mode of delivery, so while creating the voyage, this mode of delivery will be defaulted. Moving to another part, which is the exporters, and the exporters could be a normal exporters or a normal vendors. The exporters could be linked to a voyage, and it could be used for reporting purposes. Moving to the next part, which is the commodity codes and the customs description. And both are used to help with the customs identification. Here is the commodity codes. You can define here the list of the commodity codes that are associated with the released product. This will be help for the customs identification and the duty rate calculations. Then the customs description and the custom descriptions also can be used to assist in identifying the goods for the customs purposes. This will be often be an official description provided by a custom authority. After configuring all of these information, you can link this information to the released product form. So here in the released product form and under the purchase fast tab and then in the voyage, you can link here the customs description, you can link the commodity code. Now let's move to another part in the logistical area, which is the multi-leg journey setup. As described in the introduction that the journey templates are a multi-leg routes where the goods are moved between two ports. So first we'll start by defining the shipping ports, and then we'll review the legs. And then since the journey template is work along with the tracking control center will review how to define activities and then how to link these activities to the leg in the tracking control center and define the lead type and then to define the related stats. So let's get started first by the shipping ports. And the shipping ports are represent an area where the goods are received and transferred from. So these the location that I have, you can create or define a new ports, click new, and type the shipping port ID and the valid description. And then let's move to the legs. And the legs are used to identify separate parts of the journey. This part or the leg could be the journey itself. Like in this example, I have here a leg that represent the journey from Shanghai port to Alexandria port. So I have here the from port to port from Shanghai to Alexandria, and I can also select here a default mode of delivery. And the leg could be also another normal part of the journey, like the customs process or the load cargo process and so on. Then let's move and configure and define the activities. And the activities here also can be defined to track and define each significant step of the journey between two ports. To define a new activity, click New and type here the activity identification, a valid description, and this also could be linked to a shipping company. Now we are ready to configure a journey templates. So here, for example, I have a journey template that represents a journey from Shanghai port to Alexandria port. This is the identification of the journey template. And in the lines section, you can define the legs that are associated to this or applicable for this journey template. Click New and select the legs that we just defined in the leg form. When you select a leg here, it will also pick the description and from port to port from the leg form. If this leg line should update or should represent the from port to port in the voyage form, so you should set this option to yes. So here we have the applicable legs in that journey template. So first we have the load cargo, and then we have the journey itself from Shanghai to Alexandria, and then we have the customs process, and finally the local transportation. Then we will start to define and to link this leg with the tracking control center. So in the tracking control center form, we'll define the lead time and the related status. So now let's navigate to the tracking control center form and see how it really works. So the tracking control center, basically, it's managed the entire flow of the journey. With the tracking control center, we can manage and define three sections of configurations. The blank, and in this blank section, we'll see how you can update a specific field in a target table from another field, which is will be the source table. A good example here we reviewed how to update the purchase order delivery date based on the estimated voyage dates. And then the lead time. And here the lead time is in the lead time, you can define here multiple activities that related to a specific leg. And then you can specify here a lead time. So for example, for this particular leg, which is from Shanghai port to Alex port, I linked this with two activities. The first one is the sale activity, which is the journey itself. And here the lead time is 40 days. And then another activity which is SD or shipping document review. And here daily time is 1 day. Another important part here also is the status updates. You can use this create type to manage the status of the linked form, like the voyage, shipping container, folio, and so on. So here for this particular example, I have here again the leg. This is the same leg from Shanghai to Alex port. And I configure here and select three cost areas, which is the voyage, shipping container, and the item. So when I completed or ended this leg, the status of the void shipping container item will be arrived. This also could be variate from a coast area to another coast area. When it comes to navigate to the tracking control center, you can navigate to the tracking control center from the journey template. When you navigate to this will show the information that link to this link. But when it comes to the configuration or you want to modify something or add something new, you should navigate to the tracking control center from the landed cost module, then under the delivery information, set up then tracking control center. But before navigating to the tracking control center, I wanted to highlight how to define the status. So here from the setup section, then voyage status, you can define here the available status for multiple coast area. So you can define the available status here for the voyage, for shipping container, for purchase order, and so on. These are the available status that link it to the coast area. When you define a status, you should also link this status with a parent status. So for example, when I create the voyage will be created with a status created. But also I linked this created and mentioned this created as a parent status of the goods in transit. This means that the next status after the created would be goods in transit. And the next one will be the arrived status and so on. Now let's move back to the tracking control center and see how we can manage and define tracking control center records. So here I start by the create type, which is blank. And in this scenario, I'll show you how you can update the purchase order delivery date based on the estimated end date of the shipping container. In order to do this, we need two main informations, a source table and a source field, and a target table and a target field. So I selected here as a source table, I selected the shipping container activities, and the source field here will be the estimated end date. And the next part, I'm gonna update the purchase order delivery date. So I selected here the purchase order lines table as a target table, and the target field would be the delivery date. This also is should be linked with a specific activity, which is, for example, here, the local cargo activity. Then the next part is the lead time, and we reviewed how the lead time works. Let's see how we can define a new lead time. So we can just click new. Then you need to select here a specific leg. Let's pick any leg, for example, this one from Melbourne, Australia to Auckland, New Zealand. And then you should select here the activity. So I'm gonna select here the review shipping document and then set the delivery date and save. Then let's review the status update and how to manage the status update. So again, the status update also works for a particular or a specific leg that represent from port to port. And then here in the line section, you can list and define the multiple coast areas and then link each one to the appropriate status. So after configuring the tracking control center, let's move to another part of the logistical area, which is the over-under delivery setup. So when you process an item in a voyage or a purchase order, it's expected from system point of view that the item quantity outlined on the associated purchase order line will be received at the final warehouse with the exact quantity. However, in reality, the exact quantity is not always received into the final warehouse, so it might be over delivery or it might be under delivery. This means that we have to define a set of rules how to handle the over delivery and the under delivery during the voyage, and how the system will manage the differences if the over delivery or under delivery would exceed the allowed percentage. So first, let's review the components or the configuration part of the over delivery and under delivery. We have here the tolerances that we're gonna define the tolerances. We have also a groups. So here we have item over under delivery tolerances group, and we have another groups for the vendors. So these two groups will be linked to the vendor and to the item to set the combinations. So here it's a very simple group. So here we have the over delivery, the over under tolerance group. This is for the vendor, and we have another one for the item, and this should be linked to the item and the customer if you're gonna specify a particular setup for a specific item group or a vendor group. And then we have over under delivery reasons. The reasons could be also linked to a specific movement journal. We'll see later on how the movement journal will be used to manage the discrepancies or the differences between the over delivery allowed percentage and the actual over delivery or under delivery. And then we have the over under uh, setup. In this form, we're gonna define the combination. So for example, for this account group, we have a group for a vendor group that associated with 3% variance. This would be applicable for all the items, and the amount tolerance is 50%. The percentage tolerance is 3%. And we have for this scenario and demonstration that we're gonna see right now, I'm gonna use this record. So I specified here, this is for all the vendors, and I specified here a specific item, which is this one. And I specified here the amount and the percentage tolerance with 100%. Before moving to the demo, I'd like to show first the how to configure and how to manage the warehouses. So in the landed cost module, we have two new warehouses that have been introduced. The first one is the goods in transit warehouse, and this warehouse will be used during the goods in transit process. This will be an intermediate warehouse until receiving the goods in the final warehouse, and another warehouse which is the under delivery warehouse, and we'll see now how the system will use this under delivery warehouse. So normally we're gonna define a if we look to this goods in transit warehouse, you'll see that the type is goods in transit, and if we look into this one, you will see that the type is under, and then you should link the warehouses into a final warehouse. So I have prepared for this demonstration, I have created a purchase order with 4 lines for the same item. And then in order to make the video a bit quick, I just I created first the voyage and then posted the purchase order invoice. So I have created a goods in transit orders. And here, if we look into the quantity, you will see that the quantity of the first line is 1 piece. The second line is 1 piece. The third line is 2 pieces. And the last line or line number 4 is 5 pieces. And then I'm gonna receive these lines right now. So when I receive these lines, I'm gonna receive it in a different quantity to see how the system will manage the differences. So again, we have a tolerance of 100%. So I'm gonna receive the first line, which the remaining quantity here is 1 piece. I'm gonna say that I receive this line with 2. This means that this is 100% over delivery of the original quantity. And here in the second line, I'll say that I'm gonna receive 5 pieces. So this is 400 over delivery percent. And for the line number 3, I'm gonna say I only receive 1 piece, and I'll mark this close. This means that this is the latest piece that gonna receive. And the last line, I'm saying that I'm receiving also 1 piece. So this is 100 over delivery. This is 400 over delivery. The first one is in the acceptable or allowed tolerance, and the second one is exceeded the allowed tolerance. Here for the under delivery scenarios, the line number 3 is still in the allowed tolerance, and the line number 4 is exceeded the allowed tolerance with also 400%. Let's click OK. So after posting the transactions, again, as clarified in the previous video, that in order to process the goods in transit purchase order, you should first post the invoice. This is the challenge here in this process because already the quantity has been received in the warehouse with the purchase order quantity. However, again, in reality, and as you see right now, we got some variances and discrepancies while posting the actual receiving. So right now the challenge is we cannot update the purchase order no longer. And also we need to manage these differences from on-hand perspective and also from accounting perspective. So right now, let's see how we gonna manage and treat these differences. Here in the landed cost module, let's navigate to inquiries and then over under delivery transaction. With every over and under delivery transactions, the records will be created here. So let's copy our purchase order ID and filter by this purchase order. So here in that form, you will see first, this is unique identifier for the over under delivery transaction or record. Then the voyage ID, the shipping container ID. This is the reference. So this transactions coming from a purchase order, and this is the purchase order ID, the vendor account, the goods in transit ID, item number, site and warehouse, and here the important part. This is the original quantity of the line, and this is the actual receive, and this is the difference, and this is the remaining quantity to manage this difference. This is the identification whether this is over or under delivery. So if we look into the first purchase or the first line, you will see that this is over delivery. The second one is over delivery. Third and four is also under delivery and under delivery. If you look here into the status, this means that if the system is still require further action from our side to manage this difference or not. If you look at the first purchase order line, the original quantity is one, the received quantity is two, the difference is one. This means that however this is over delivery, but this is still in the allowed percentage or the allowed tolerance. So what the system performed, the system has posted a movement journal to increase the final warehouse. So if we look at this movement journal, you will see that the system increased here the warehouse number 10, which is the purchase order warehouse by one. If you look also into the line number 3, which is under delivery, which is also still in the allowed percentage or the allowed tolerance, you'll see that the system posted also a movement journal, but with negative quantity. So the system now is posting a movement journals to manage or to adjust the on hand to reflect the reality. But for the line number 2 and the line number 4, these transactions exceeded the allowed tolerance. So for the purchase order or for the line number 2, you will see here that the original quantity was 1. However, the actual received quantity is 5. And this is the status is still in process. So what the system performed here, the system has created a purchase order for this vendor to buy the differences, which is 4 pieces. So if we look at this purchase order, so this is a purchase order for the same item and for the same vendor with quantity of 4. So then you can receive the quantity and then you can post the purchase order invoice to reflect the on hand and to reflect the accounting part from the vendor side. And then for the line number 4, which is the under delivery. So this under delivery, the quantity was 5 and I only received 1. So the differences are 4 pieces. This is under delivery. This is still in process. I can also mention here some reason that this is from the format that we just defined. So I can say that this is short shipped by the vendor. And now the system is still wait. This is still in process. System asks here to manage this difference. So what can I do? First, what the system do? If you look at the purchase order was in warehouse number 10. Since we already posted the invoice, so the system already received 5 pieces in warehouse number 10. However, in fact, the actual received quantity is only one. So if you look in the transfer order, you will see that the system posted automatic transfer or transfer journal, and the system moved 4 pieces from the warehouse number 10 to the under delivery warehouse. So now the system reduced the quantity from the warehouse number 10 and increased the quantity in warehouse the under delivery. And then right now the action for you. We can create here a movement journal. So this will decrease the on hand from the under delivery warehouse, and then we can consume this cost in a P&L account, or you can create a purchase order. This would be something like a return purchase order to also reflect the on hand and reflect the vendor accounting. If we click here in the purchase order, this is the quantity that gonna be created. And then you will see that if we open this purchase order, you will see here that the system created a purchase order line for the same vendor, for the same item in the under delivery warehouse to return 4 pieces. And now for the last step in the configurations, which is the warehouse management configuration. Indeed, this is an optional step if you are managing the goods in transit process using the advanced warehouse management process or no. So I'm not gonna go deep in dive in that warehouse management setup, but I'm gonna show a high level overview about the configurations and how I managed this process in my environment. So first, as normal with the warehouse management setup, I started by defining allocation directives for the goods in transit. This is a normal one where the quantity will be moved to here to this location in my warehouse. This should be the put away location. And then with the work template, I have here a sample work template for the work order type, also goods in transit. This is a simple pick and put step, and I just created a work class ID. This is a new work class ID for the goods in transit process. And then with the warehouse mobile device, I defined here two menu items. I define a first menu item for the goods in transit receiving, and then I defined a new one for the put away process, and I linked this as usual. The goods in transit work with a work class with goods in transit or GIT. Last but not least, I'd like to show you and share with you the demo data files that I used in this session. So I'm gonna upload this folder. This folder contains all the templates of the almost all the forms and the setup that I performed. So for example, here the file of the course type code, you can just use this file and use the data import and export framework and start to upload this to configure your environment in order to get started and work with the landed cost module. This is another file, for example, for the journey lines. It contains all the required lines. Again, I'd just like to summarize what we have discussed during our session. So we were discussed the landed cost setup and configurations. We walked through the setup and reviewed the voyage status, the costing area, and we have seen how to define the cost type codes and link this cost type code to automatic cost calculation. And then with the delivery information, we configure the tracking control center and see how the tracking control center is connected with the journey templates. We have defined also the shipping informations, and these information are really helpful for the reporting purposes. And then we have reviewed the over and under delivery tolerances and see how the system manage the differences and discrepancies between the actual receiving and the estimated receiving. And then we have reviewed how to configure the warehouse management setup. I really hope that this session helped you, and I wish you a good luck. Thank you.